Opendoor stock just closed out Thursday's session on a high note, finishing up around 5.6% at $2.42. The day began with an early rally, briefly pushing the stock to an intraday high of $2.91, but we saw some cooling off later as traders took profits. What's key, though, is that the stock remained in positive territory all session long and still posted a solid green close. That kind of stability, especially after such a sharp run-up earlier in the week, suggests we may be settling into a new support range between $2.20 and $2.40. Let's break this down. When a stock shows this kind of follow-through after a major spike, holding ground without crashing back to earth, it typically signals the presence of committed buyers. We're not just seeing a one-day squeeze and collapse. Instead, we're watching a base form, and that's a critical ingredient for sustainable upward momentum. Now, some of this action is clearly driven by retail sentiment. The buzz around Opendoor remains intense, especially on social platforms where users are openly comparing this rally to past short squeezes. There's heavy discussion of call options, float rotation, and short interest levels. And while these conversations can be volatile, they are powerful in setting a mood and driving volume. But let's not make this only about the meme factor. Opendoor is in the middle of a deeper story. The company is attempting to evolve its business model, moving from being strictly a home flipping iBuyer to something more resilient and diversified. They've been focusing on agent partnerships, looking to connect sellers with local agents through programs that generate fees, not just risky home purchases. This is a key strategic shift that's going to matter long term. We're also getting closer to earnings season again, with Opendoor expected to release Q2 results in August. That's the next big catalyst after the vote. And here's where the story could really turn. If earnings show even incremental progress, like improving margins, better inventory turnover, or stronger conversion metrics, that could light the next fuse for the stock. Investors will be looking for clues that the worst of the housing correction is behind them and that Opendoor can stabilize its model in a higher rate environment. Now, let's talk about the reverse stock split vote, because we're just days away from it. The market's reaction suggests that it's becoming less of a threat. With the stock back above $2, Opendoor is no longer under immediate pressure to regain compliance with listing standards. That's key. The board has also made it clear that they would only enact a reverse split if absolutely necessary. The intention seems to be to have the authority as a fallback option, not to wield it recklessly. And here's the critical point: retail investors know this. They're watching closely. A decision not to enact a split, whether because the vote is delayed, cancelled, or simply unused, would likely be viewed as a vote of confidence in the stock's trajectory. It could actually act as a positive catalyst, triggering renewed momentum and possibly bringing in new buyers who are on the sidelines due to dilution fears. What today's price action shows us is that sentiment is holding strong. Buyers are still stepping in. Profit-taking is being absorbed without a full retreat. And the volume, while down slightly from the explosive sessions earlier this week, remains well above average. That tells me we're not just watching a flash in the pan. We're seeing the early construction of a more sustained rally. Is there still risk? Absolutely. The housing market remains fragile, mortgage rates are high, and profitability has been elusive for Opendoor. But if the company is genuinely adapting, cutting costs, building new revenue streams, and expanding partnerships, then we're looking at a stock that could be moving from high-risk meme play into the early stages of a turnaround story. So, heading into the final trading day of the week, here's my position. I remain bullish. I think we're going to see continued energy leading into the shareholder vote. But more importantly, I believe the real momentum is going to shift toward earnings. That's where institutional investors may start to get involved, and where fundamentals could finally start to support the sentiment. Today was a consolidation day, strong close, steady hands, and hints of deeper support forming. That's a recipe for continuation. If we see another green day tomorrow and pre-market action stays solid, the stock could retest that $3 level soon. And if earnings surprise to the upside in August, well, that could be the inflection point where this rally grows legs. So buckle up. We're entering a new phase of this rally, one that isn't just built on hype but increasingly supported by strategy, sentiment, and stability.